How to improve Fibonacci retracement trading like a pro. How to improve Fibonacci retracements trading like a pro. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW24 traders. For Fibonacci trading, our website is www.dayprotraders.com. The title of the video is how one can improve Fibonacci retracement trading like a pro. Alright, let's get started. I recommend to traders to pay attention to everything we are discussing here and to watch the full length of this tutorial so they may understand exactly how they can improve Fibonacci retracement trading like a pro. Alright. So when we talk to traders about Fibonacci retracement, trader will say, okay, I know about Fibonacci retracement and I understand it and I've been trading it. But the next question is that, okay, have you been achieving consistent winning trade with your Fibonacci retracement trading? And the honest answer is no. Why? Because traders are trading something else. What I have said to traders before is that the only way to fool a day trader or a swing trader or a position trader is to make that trader trade something else instead of the price itself. What I mean by that is to divert the attention of that trader away from the price to something else. So when traders are using the Fibonacci retracement levels, all right, they are focusing on the Fibonacci retracement level and they switch their attention away from the price action, which is in fact the number one indicator, and they start losing. It does not mean that they cannot use the Fibonacci retracement, okay, tools like a pro, but they are just misusing it or trading something else. In this tutorial, I will clear your mind from that, misunderstanding once and for all, and I will put you on the right path so you also can start making excellent trading decisions and improve your Fibonacci retracement trading like a professional trader, keeping your eyes on the ball, which is the price itself. Okay, let's get started. All right, first of all, here I have this stock here. I'm going to stay on a daily chart. Comcast Corporation. Class A. This is CMCSA. That the APIC is Charlie Mark Charlie Sierra Alpha. It's listed on the NASDAQ 100. I'm on the daily chart. So to avoid that my video is too long, I have drawn lines on this chart. You can see that the stock at this point in time went down from this point here and down to this level. Yes or no? Okay? That's what we see. Okay? Now, the stock is now going up. So we will say Fibonacci retracement. All right. So you can see that the price reaches this level here, which is the 61.8% Fibonacci retracement level. Pay attention here, 61.8% Fibonacci retracement level of the price move from here down to this level here. And you can see that some traders sold it here. All right, price continued to go up. It's now at 78%. Instead of 78.6%, I always use 78%. All right, here it is, 78%. The price now at 78% Fibonacci retracement level. All right, so first time it touched it here, some traders sold it down. Now it's above that level. Okay, so why? Okay, the price went down here. Okay. This is a very good trading setup. Why this one is the very good trading setup, 61.8% Fibonacci retracement level. It is a very good trading setup here, a bearish trading setup here, because after a bearish progression, the price breaks below a key level and was retesting that key level here, and that key level corresponds to 61.8% Fibonacci retracement level. So when we are using the Fibonacci retracement level, pay attention. And the Fibonacci retracement level corresponds to the price breaking below and retesting that level. That will be a better bearish trading setup when we are using the Fibonacci retracement level. Sometimes trader will be selling because of the Fibonacci retracement level. Price is at a Fibonacci retracement level. Instead of focusing on the language of the price, which means price going down, price is looking for a better support level. And the price is converting the support into resistance level if the bearish momentum is strong. So conversion of support into resistance level, this is the language of the bearish progression. So when we see the price going down like this, and rally up to a prior support level, here it is, my friend. You see that the price changing direction here, yes or no? It's a key level, okay? Price changing direction here. Here it is, all right? This level was a key level, price changing direction here. Are you with me? And also, if you look carefully here, the price was consolidating, okay, around that key level, okay, around this key level here that we are looking at. It was consolidating around that key level. So it's a midpoint of a consolidation also. Here it is, all right? So it's a key level. So what the price has done here, it breaks below that key level and return to retest it. This is the language of the price. Now the price is also at the 61.8% Fibonacci retracement level. Now we have a bearish trading setup, or a high probability bearish trading setup. The price is at the 61.8% level. So think of market participants. The Fibonacci traders will be interested to trade this trading setup, yes or no? Okay, you want to think of who will be willing to trade together with you when you see a trading setup. Now, ordinary chartists will also be interested to trade this with you. Professional will be interested to trade this trading setup with you, because price breaks below a key level and retesting that key level after a long bearish progression. The first intention is to sell. But I want to warn you now, so you do not go around making a trade anyhow. When we see like this, okay, this is not yet a trading signal. We will implement what we call a top-down trading method. So in order to trade like a pro, one must always implement a top-down trading method. So we are on a daily chart, we'll call this. So this stock will be on our bearish watch list. Then we will implement a top-down trading method or a multiple time frame trading method. So because we are on a daily chart, we'll use the daily chart as our trading setup. Okay, we'll go to the hourly chart waiting for the clear cut signal, and we'll go to the 10-minute time frame for the entry. Because we see this trading setup on a daily chart, we will be a little bit curious. This is about the validation of the trading setup. So we see like this, we say, okay, let's go to the weekly chart, the higher time frame, weekly chart, monthly chart, to see the bigger picture. Where are we? Is here a resistance zone? The best place to sell is a resistance zone. Yes, it is a resistance zone also on the weekly chart, which is good. We will push our curiosity a little bit higher and say, well, how about the monthly chart and so on? This is about the validation of the trading setup. Now, this video is not about validation of a trading setup, so I'm going to go back to my Fibonacci retracement. So this was a good, very good, okay, trading setup, okay? Now the price came to 78.78%, all right, Fibonacci retracement level. I use 78 instead of 78.6%. Here again, trader will be saying, where are we? Are we at the key level? Here again, we have a key level. You see, this is a resistance level, a resistance zone. Am I talking to myself? Resistance zone, okay, here it is, it's a resistance zone. So what the price has done, price break below that key level, went around, now it's now here for the first time. So I want you to pay attention. For the first time, the price was here, retesting that key level. So the first intention to sell, this is also a bearish trading setup. Price going down, if you sell successfully using a top-down trading method without ignoring the economy news and the fundamentals, and the price going down, the price looking for a better support level. So your first and nearest support level is your first target. So price went down to the first and nearest support level, traders took profit. Now the price returned back to this point here. Will it go down again? So we on a daily chart, we'll go to the hourly chart, wait for the signal, and enter the trade. Attention, my apologies to trader, enter the trade on a 10-minute time frame or any lower time frame, okay? I have another example I want to show you. There are more examples. These are bearish, okay, example of a Fibonacci retracement. I have also bullish example. So stay with us as I'm clarifying everything for you so you don't have any more, okay, misunderstanding about Fibonacci trading, okay? The next stock is Cerna Corporation, EPIC CERN, also listed on the NAX 100, Charlie Echo Romeo November. Again, I'm on a daily chart and I have my line already ready here. You can see that this stock also went down from this point, okay, down to this point, okay. So then it started rallying up and it came to 61.8% Fibonacci retracement level. The trader sold it here and the price gapped down and went down fast. Okay, see, continued to go down more. Why? This is a high probability Fibonacci retracement trading setup. Why? Because this was a key level before. You see, price went down, changing direction here. Okay, same level, changing direction. Oops, I'm moving my line. Okay, you see, you getting the message now? The best Fibonacci retracement level it is a trading setup, but we must use a top-down trading method. Here it is. It was also a high here. Okay, so price D below that level. Remember what I said, and retesting that level for the what? For the first time. If the price D below a key level and was retesting that key level for the first time, the first intention is to sell. So we have a bearish trading setup. Now we will implement a top-down trading method to trade it. But as we are trading any stock, do me a favor, go to Google Finance, Yahoo Finance, check the economy news relating to the financial instrument. I will not going to bother you too much about the trading triangle, which is about the market, the sector, the individual financial instrument. At least check the economy news relating to that financial instrument before you start going, okay, blah, blah, blah. Okay, because the market environment will change the dynamics of the technical trading, okay? So this is a good one. So at this point in time, as I always do, put a vertical line there, put this stock on our watch list. We switch to the hourly chart, wait for the clear cut signal, or remember top-down trading method consists of using at least 2 time frames. If it's going too fast, we can go directly from the daily chart to the 10-minute time frame. At least 2 time frames, all right? And we will take it down. Okay, here it is now. Then it bounce again. Here it is. Look at the second one here. So traders will recognize this is a high probability trading setup. Why? Why it was a high probability trading setup? Because the price D below a key level was retesting that key level, and also it's at the Fibonacci retracement level. The Fibonacci retracement levels are not magic one. The normal key levels that we see on the chart combined with the Fibonacci retracement level will allow us to improve our Fibonacci retracement trading. So here it is, it went down first time, okay? So I'm going to remove my first Fibonacci retracement tool. So now we have another scenario, price went down again from A to B. Are you with me? Now we apply again Fibonacci retracement level, okay, to this move down, okay, from here down to this point. Now you can see that the price is at which level again? At 50% Fibonacci retracement level. All right, I like 50% Fibonacci retracement level. Here it is. So, is this a key level? That's the question. It is a key level. Look at that. Did the price change direction in this zone? You see, it's not exactly, but you can see in that zone. It came down and changed its direction here. Try to retest it here. Here it is. Same again, this zone. Look carefully, my friend. It touch it here and change the direction. So this is a key level. So what the price has done, the price breaks below a key level and was retesting it for the first time. Price breaks below a key level and was retesting it for the first time. So the first intention, it is to sell. This is a bearish trading setup again. So then the trader will use what? A top-down trading method. What is a top-down trading method? It's a trading method that consists of using at least what? 2 times frame. Generally, traders use 3 times frame. Because we are on a daily chart, my recommendation for a top-down trading method is to combine the daily chart, the hourly chart, and the 10-minute time frame. Good. But what else do we, what other verification we need to do? If we see any trading setup, as we have seen now, this is a high probability trading setup, what do I say? Do me a favor, go to the higher time frame and check and try to validate your trading setup. I will not bother you too much by going again to the higher time frame. So you see here, this is a high probability trading setup. You getting the message? So we want to combine a Fibonacci retracement level with price breaking below a key level, retesting that key level. If that key level corresponds to a Fibonacci retracement level, then we are interested in that Fibonacci retracement trading. This will allow us to improve our Fibonacci trading without diverting our attention away from the price. What the price is doing all the time, the price is breaking above a key level, retesting it, and displaying a new high, going up. If you're going down, you break below a key level, retest that key level, display lower lows, lower high. Okay? So you getting the message? So I have more examples, and I hope you will put into use. As always, don't skip the steps, all right? What do I mean by that, okay? So I always give the example of the army. So the army, the soldiers go into the classroom and they learn something about weapons, all right? But they don't go to war just because they went to the classroom, all right? They will go and practice. So the same thing we do on YouTube, we post a video, which is we talk about something in the classroom. Now traders must use a demo account, practice. Don't skip the practice stage. You're learning now in the classroom, because it's a battlefield. Trading is like a battlefield. You want to practice, get ready. If you can't do it with a demo account, all right, on a live chat, it means that when it comes to real trading, you may not be able to do it. So test yourself, sit down when the market is open, switch into a professional trader mode, and demo trade live chat. Don't use, okay, a delay chart, okay, live chart, and do it properly. Don't lie to yourself. Do it as you have, okay, X amount of money in your trading account, which you can afford, and how you will behave with a real money trading okay, a stock of futures, okay. So here we have another example. It is Cognizant Technology, difficult names, all right, Cognizant Technology. Epic is CTSH. If my pronunciation is incorrect, please feel free to laugh loudly, okay? It's good for life, okay? So, Charlie Tango Sierra Hotel. And we can see that again here, the stock went down. It's also listed on the NASDAQ 100. And here it is, it went down from A to B, yes or no? And then rally up to which level? 61.8% Fibonacci retracement level, which is the line, the horizontal line on my chart. Now our verification is to check whether that Fibonacci retracement level corresponds to what? A key levels. Break below, retest, turn around. Here it is, it's a key, it is a key level. You see, you are getting the message. Why sometimes it works, why sometimes it doesn't work. It doesn't work sometimes because the price is at the wrong place and no one is interested in that trade. You want many market participants to be interested in your trading setup. Fibonacci traders, crazy traders, chartists, all right, speculators, momentum traders, let them all be interested in your trade. Because the CCI also was overbought at that point in time. RSI will be overbought at that point. All these traders that are using different technical tools will also be thinking exactly the same thing that you are thinking. But you do not want to rush like other traders. You want to use what? A top-down trading method. But you will also validate your trading setup, because sometimes you will see like this. It looks gorgeous, it looks beautiful, but it is nasty. What do I mean by that? It means that it is not a valid trading setup. When you go to the higher time frame, trying to validate your trading setup, you know that, oh, I don't want to trade this one. It looks beautiful, but I'm not interested in that, okay, trading setup. Okay, so it's good because we have, okay, the price break below a key level. We are retesting the 61.8% Fibonacci retracement level. Now we will, okay, use a top-down trading method. Now I have a question for you. Okay, so now we are again at the same zone. Okay, think of this one. Okay, we are again at the same spot. It is as bearish as this was. Remember what I said to you. If the price breaks below a key level and was retesting that key level for the second time or the third time. For the first time. First time, usually, the first time is the time when everybody would like to sell because the first time is retesting. Now, this is the second time. When you see is retesting for the second time, this is the second time, you want to check what has happened. Okay, so now here we are. I will talk about it now. Okay, I hope I'm not going over my time because I want this video to be under 20 minutes. Okay, I'll go over my time now. All right, let's move on. So for the second time, check what has happened before. So what has happened? The price has formed, okay, an inverted head and shoulder chart pattern before retesting for the second time. So a bullish chart pattern was formed at the end of a downtrend and the price retesting that key level for the second time. We will be a little bit very, very cautious, not a little bit, very, very cautious to trade this one. So again, let's put this on our watch list. But in fact, I will not like to sell at this. I would prefer it to break above this level now and to retest it to find a support and to continue to go up because of, okay, the bullish chart pattern here. So be aware of it, break below, retest it for the first time. Usually it's the high probability trading setup. Then we implement a top-down trading method. If it's retesting it for the second time, check what has happened before and go to the higher time frame to validate your trading setup. The validation of the trading setup will allow you to only trade high probability trading setup, okay? All right, and also to filter out false trading setup, okay? So here it is, went down, retesting that level, and it's come down. These are bearish examples. I have bullish examples, so don't go away. So I have one more bearish example that I want to show you, all right? AMGN, also listed on the Nasdaq 100, AMGN, all right? So here again, we can see that this stock, I'm on the daily chart, okay? Because a lot of traders don't go far than the daily chart. So try to please you guys, okay? Feel free to clap for me. No, it's this to make you laugh a bit, okay? I'm not taking the piece, okay? All right. So the price went down from here all the way here. Is good, yes or no? So now it rallied up to 61.8%. We have a lot of 61.8%. We have only 50% so far. But for a bullish example, I think I have a 38.2% Fibonacci retracement level. But you are getting the message, okay? You are getting it, which is good. So price rally up to 61.8%. What do we need? What verification we need to do for the first time? So this is the first time. So this is very, very interesting to us. For the first time, he retested that. So we will be putting this one definitely on our watch list, okay? Because the first time he is testing it. So we want to ascertain that this is a killer. So this is a price changing direction here. It is also the median line of a consolidation. Be aware that the median line of the consolidation zone is a very important key level. In fact, the reason why the price was oscillating around this level is because of this key level, 16202. Whenever you see a consolidation, draw the median line and understand that that median line is a very, very important key level. All right. So not only this is the normal key level, this is also the median line of a consolidation. So when we see retesting a key level that is equal to the median line of a prior consolidation, we need to be very, very, okay, professional to trade it. We know that this is a high probability trading setup. So it is a key level. Now we will implement a top-down trading method. All right. So you will also go to the higher time frame to validate this trading setup. We check the weekly chart, the monthly chart. Even you can push it to the yearly chart. Okay. So this is for the first time. Now the second time, the price came back here. So here we will become a little bit cautious. So we will ascertain what the price has done before. So at this point in time, we will be saying, okay, it looks like we have a double bottom here. Okay, a double bottom here. And because if we know how to trade a double bottom chart pattern like a pro, we will say that, okay, as long as it doesn't find a support above the nut, we can still give it a chance. So we will be looking for opportunity to sell only below the nut, which is corresponding to our prior key level here. Okay, but again, here it works again. So by using a top-down trading method, we will be able to trade this. You can see that the price does not go, okay, down, down, down. You have some days where the price here is going down. You see, it went up, went down some days, didn't go anywhere, was a doji, but finally it came down. So be aware of that if the price going down, doesn't go down, all bearish candle, okay? So we have a lot of tops here being formed and finally gap down, and the traders are just using a top-down trading method around this key level. The reason why you see this here, because traders know that there was a consolidation in this session, market pattern. We don't want to violate the market pattern. Now what is happening here, the price start consolidating between, this level here, 14993, let's call it 14150, okay? The price start consolidating between this blue line and the black line here, so we see it's consolidating, so they see the market pattern. So those who want to sell were selling here. These are non-Fibonacci traders only. These are, chartists that are using the chart pattern, so they are selling here, buying here. So the price start consolidating, they are selling, here it is. Now we are here. What is going to happen here? If you look carefully, so we are here now. Are we here? Are we not? Okay. So I want to draw my lines again, and I want you to pay attention. So for your homework, all right, what will happen? So price go down, you see, from here, I'll move. So it went down from here to here, yes or no? Okay. Now it rallied up to which level? 38.2%. Okay, I need to remove my prior line so you can see, 38.2% Fibonacci retracement level. That's where we are now. So for the first time, after the price went down from here to here, it's retesting this level. Will it go down? Well, use a top-down trading method to trade it. You can see that it went down a bit, but it's going up. So when we are using a top-down trading method, if the signal fell, we close the trade. If the signal is back again, we enter the trade again. All right. So you want to be aware of what I said to you before. The market pattern, the violation of the market pattern. Okay. One do not want to do that. So we see this consolidation, price D below that consolidation. If it's going down, the ultimate target is here. Near the level of 12967. The projection of the height of the consolidation, price D below it, we project it down. But you can see that the price went below that consolidation for the first time and stopped at the midpoint of the projection. Now we are here. So because the price found its support near the midpoint of the projection, there's a high chance that the price will continue to go up here. Okay, there's a high chance unless we're going to have a consolidation. There's a high chance that it will continue to go up. Okay? Always by using a top-down trading method, one will avoid trading mistake. What I do not want traders to go and do is to apply this trading method like a plug and play. It's not plug and play, okay? It's not about 1 + 1 = 2, fingers crossed, hopefully everything worked well. No. We are looking for, a high probability trading setup. Price is at the Fibonacci retracement level. That Fibonacci retracement level corresponds also to a key level. The price has broken below that key level. It's now retesting that key level. Now we, as a professional trader, we use a top-down trading method to trade it. We check the economy news and we trade it like a pro. If the signal fell, we are out. Okay? We want to buy at the support level. We want to sell at resistance level on the edge. Okay? All right? Very, very important, okay? This video is for educational purposes only. It's neither a solicitation nor an offer to buy or sell any financial instrument, okay? Very, very important. So, you can also see, whenever you see a double bottom, a price retesting a key level like this, be very, very cautious, okay? All right? Be very, very cautious, okay? The next examples that I have are bullish examples. So it's good to also talk about bullish stocks, all right? And there is one here with another difficult name, Clark-Tencor Corporation. EPIC is Kilo Lima Alpha Charlie, okay? KLAC, also on the Nasdaq 100. In this time, we have a stock that went out from here all the way up here. Okay, and you can notice if you look carefully, the stock also has gap up. Okay, it has gap up from this level. Okay, this level here up to this point here. Okay, the stock gap up. Yes or no? Okay, so there is a gap here. So whenever you see a gap like this, draw the high of the gap and the low of the gap and the median line of the gap. In fact, if you want to learn to trade gaps like a pro, go to www.dayprotrader.com, click on gap trading methods, all right? So remember that the high, the low, and the median line of a gap are key levels, okay? So the price went up from here all the way up here, and then pull back to this zone, in the zone of 38.2%, this level here. Okay, 38.2% Fibonacci retracement level, this zone. All right, same zone here. Here it is, it changed direction here. You see, it went up, it changed direction here near that this key level. The same zone here is a key level. Not only that, it's also in a zone of the high of the gap. So it's a very, very important key level, the line here. So the price went up from here to this point here, and then pull back to 38.2% Fibonacci retracement zone. Will you be interested in that? Yes, you will be. But you will say also, George, look carefully. The price did retest that level for the first time here. Great. And traders bought it. And it went up a bit, but not too far. You can see here it went up a bit the first time, but pull back below that prior low. Am I talking to myself? So the price went up a bit, but went below this low. So we will say that it became a little bit bearish. But if the price did below the prior low and quickly return back above that low, it is very, very bullish. Now, you did not get what I said now. If we have a low like this, okay, any price did below that low, but quickly return back above the prior low, it becomes very, very bullish. You do not need anybody permission to buy. All right? It's very, very bullish. So here we see for the first time, it touched it here. We will implement a top-down trading method. Was difficult trade, finally went up, okay? But then quickly come back down, went below the prior low, but quickly went back above it. So then once it went back above the prior low, we'll adjust our line and we are again in a bullish mood. And from here we use a top-down trading method, and here it is going up. So you can see price went up from here to here, pull back to 38.2% Fibonacci retracement level. That level is a key level. The price breaks above that key level and was retesting that key level for the first time. Remember, for a bearish example, price D below that key level was retesting it for the first time. For the bullish example, a bullish Fibonacci retracement level, price breaks above a key level, was retesting that key level, and that key level also corresponds to Fibonacci retracement level. We will implement a top-down trading method to trade it. Another example that I gave to traders, when we are using Fibonacci, in order to improve Fibonacci retracement trading like a pro, one can look for chart pattern around a key Fibonacci retracement level. So for instance, you can see here, we can see that we have a kind of a double bottom chart pattern around a Fibonacci retracement level. That becomes very, very bullish, all right? When we see a bearish chart pattern on or near a Fibonacci retracement level after a prior bearish move, we will give priority to bearish signal, okay? So this is one example when the stock rally up from A to B, breaking above a key level and retesting a key level, and that key level also corresponds to Fibonacci retracement level. So instead of just gambling with the Fibonacci retracement level, shooting it up and down, hoping that everything went well, one should concentrate on the price action, the language of the price, break above, retest, then around, break below, retest, then around, all right? And we will implement a top-down trading method to trade it. What usually takes place? The Fibonacci traders are so aggressive. They just buy, they just sell. It will go down, it must go down. No, by using that's a market distortion. Even the big market players are doing that. Use a top-down trading method, and if there is a signal to sell, we will see it, and we will sell. If there is a signal to buy, we will identify it, and we will buy, okay? Using a top-down trading method. All right. If you need more information about a top-down trading method and you are a big market player, all right, contact us and we can help you, all right, to improve your top-down trading method so we can avoid market distortions. All right. I'm not saying that this is a market manipulation. It's not market manipulation. This is a market distortion. That sometimes market participants are doing something that is distorting the market, but their intention is not to manipulate the market. Okay. All right. Here we are. So here you see. So we have a bullish example here. I have another bullish example. Microsoft Windows 10. So again, I'm on a daily chart for Microsoft, and I want to show you another example that you can use if you want to improve your Fibonacci retracement trading like a pro. Here again, we can see the same strategy that we apply. Stock went up from A to B, from one price level to the next price level. Okay, is it bullish enough for you? All right, so from here all the way up here. Okay, that's the first leg of this bullish progression. Okay, let me change the color for this to bring a bit of color into orange. All right, to cheer you up a bit. So then the price pulled back to a Fibonacci retracement level. Here it is for the first time, here retesting this level. Okay, so we want to know which Fibonacci retracement is that. Okay, so we draw a line from here all the way up here, and to identify which Fibonacci retracement level is this one. Oh, wow, look at that. This time we have 50% Fibonacci retracement level. Can you see here 50% Fibonacci retracement level? All right. In fact, 50% is not a Fibonacci number. It just traders use it because it's a psychological price level. Okay, it's not a real Fibonacci retracement level, but traders, okay, over the time, traders has conferred to this level. Okay, the characteristic of a Fibonacci retracement level. Okay, so here we are. So you can see that the stock went up, okay, Microsoft stock, and pulled back to 50% Fibonacci retracement level for the first time. So now we want to ascertain that this is a key level by looking on our left-hand side. Okay, all right, is it a key level? Yes, it is. How do we know? Yeah, because the price did change direction. Look at all this has happened here around that zone. Price retesting and coming down. And again here, the same key level, okay? And again here, price bouncing level, okay? So now finally, you see Microsoft has to push it. They force it through because there were sellers here selling. They were stopping the price going above, okay, this key level of, call it $49, okay? They were stopping it. Anytime the stock came to 49, they were just selling it. But finally, Microsoft stock gaps up, okay, to escape the bearish pressure. Boom, pressure. You can feel it there. Can you feel it? Push. All right. So we have a gap. Okay, that's the high of the gap. That's the low of the gap, which is also a key level. Not only that, we have a pivot point here where the price did change direction many times. So we have a key level. So a price breaks below a key level and was retesting that key level for the first time. The first thing that is coming to our mind is to give priority to bullish signal by using a top-down trading method. As a swing trader or day trader, we will go to Google Finance or Yahoo Finance, check the economy news relating to Microsoft at that point in time. If we are more experienced trader or advanced trader, we will check what is happening with the S&P 500. Is it also bullish at that point in time? So we do not trade against the market. We'll also check the Nasdaq 100 because this stock is also listed on the Nasdaq 100, and we don't want to trade against the sector or the group. All right. We also pay attention to the market leaders of the Nasdaq 100, Google and Apple stock, so we may not trade against the market leaders. But technically speaking, we have a high probability bullish trading setup because a stock is retesting for the first time a key level, and that key level is also corresponding to a Fibonacci retracement level. If you are a purest technical trader that trade like a crazy trader without paying attention to economy news, you will use a top-down trading method at this point in time. You're on a daily chart, you will go to the weekly chart, monthly chart to validate the trading setup. Is everything adding together, or am I being fooled? Am I looking at a part of the picture, or am I looking at the bigger picture or the whole picture? All right. Once that verification is done, we switch to the top-down trading method. Daily chart, hourly chart, okay, 10-minute time frame, or at least 2 time frame. For day trading, I can go from the daily chart directly to the 5-minute time frame, or daily chart directly to the 3-minute time frame. I'm using at least 2 time frame for my trade. Because I want to buy here, if I switch to the lower time frame, I may look for bullish chart pattern being formed on here, the zone on my entry time frame, or I may look for price display, high lows, high in a rising channel on the edge or breakable retest. Around. Am I getting your attention? All right. I promise that this video will be short. Now here we are. I have doubled my time, 40 minutes. I hope you have found it useful also, all this discussion and explanation that we are doing, clarification, so you may stop completely once and for all playing a Fibonacci gambling game in the financial market. So you know exactly what to look for and you know exactly how to trade it. Okay? This is the end of this tutorial about how to improve Fibonacci retracement trading like a pro. This video is suitable for day traders, swing traders, and position traders, for beginners and also for advanced traders. Traders that want to improve their Fibonacci trading is suitable for Fibonacci traders. To summarize this video, in order to improve Fibonacci retracement trading like a pro, one must first, give priority to the price action, combining the Fibonacci retracement level with the price action. In this tutorial, we have identify 2 things. Price is going up, price will break resistance, and we try to convert that resistance into support. So if that key level corresponds to a Fibonacci retracement level, after the price breaks above that key level and was retesting it, we want to give priority to bullish trading setup. We want to give priority to bullish signal using a top-down trading method. On the other hand, we have also recognized that if the price is going down, the price is looking for a better support level, but the price will also try to convert a support level into a resistance if the bearish momentum is strong. Therefore, for a bearish Fibonacci retracement level, we are interested in setup where the price breaks below a key level and was retesting that key level, and that key level also corresponds to a key Fibonacci retracement level. We will implement a top-down trading method without ignoring the economy news or the fundamentals. Another trick to validate our trading setup, because sometimes one may look at a setup and say, here it is, exactly what George has said. To avoid the false Fibonacci retracement trading setup, one can use the higher time frames to validate that trading setup before even starting to trade it. So when we see, for instance, on the daily chart, we may go to the weekly chart, monthly chart to see whether everything is adding up together. Another important point that I have mentioned in this video is this. Now, when we see a bullish chart pattern, at the key Fibonacci retracement level, we are interested in that bullish chart pattern. When we see a bearish chart pattern at the key Fibonacci retracement level, after a bearish trend, we are interested in that, bearish chart pattern. It makes sense? This is not about technical analysis alone. It's about trading like a pro, combining the technical analysis with the fundamental without, getting too much, excited like a child, It makes sense? It is also powerful. I hope you have learned something from this video and will start improving your Fibonacci retracement trading like a pro. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. If you have any question, put it in the comment section. You have any suggestion, put it in the comment section. And in due course, I will record another video to answer your specific question. If you want to learn more about Fibonacci retracement, go to www.dayprotraders.com. We are the TSTW24 traders talking about how to improve Fibonacci retracement trading like a pro. Speak to you soon.